A very good evening to all of you students. How are you guys? So students, as you know that we are in the last session of this chapter, that is chapter 5, audit of items of financial statements. And today, as promised in the last session, we shall be doing a few case studies, MCQs, descriptive questions, and we will also discuss how to answer, how to write answers relating to questions, particularly concerning this chapter. So before we start those case studies, MCQs and descriptive questions, students, let us try to finish a small topic that is verification of cash and cash equivalents which appear in the financial statements of an entity, particularly in context of a company. So what would be students various assertions regarding cash and cash equivalents? Yes. What would be various assertions regarding cash and cash equivalents? Now this should come from you guys with lightning speed now. We have been talking this since 5-7 lectures now. Yes, Pranav, existence, completeness, valuation, that's also correct, rights and disclosure. Yes, yes. Well done, Pranav. So, again, students, applying your own mind, think over which audit procedures would be employed by an auditor to verify existence of cash in hand. To verify existence and completeness. Okay, let us consider both together. Yes. Yes, Manoj, you are writing correctly. There would be chances of dummy vouchers, but I am talking about audit procedures. Audit procedures, always remember, these are steps which an auditor is supposed to perform. You have to write those acts. You have to write it in a language, in the form of steps, in the form of methods, which an auditor has to perform to verify a particular thing which is being asked for from you in the question paper. Yes. Millie, you are saying inspection. Inspection of what? Yes. Inspection of what? Yes. Tambeshwari, you are also right. Inspecting cash book. And one of the main steps which you are missing is, guys, verifying physical cash, making a surprise inspection of physical cash as on closing date. And then you have to correlate its balance with what is appearing in the cash book. And also one has to take care to see that if cash balances are lying with more than one person's, like if the duties of holding cash are divided among 2-3 persons, like one is head cashier, one is junior cashier, one is dealing with petty cash. So all the cash should be verified and it should be included and recorded in the cash book. Yes. So very simple thing, but obviously simple things are also being asked for in the exams. And sometimes under examination conditions, if we do not remember, we forget, we fail to recapitulate. Clear, guys? And for cash equivalents, yes, you are writing about bank passbooks, bank statements. What else could be done for verifying bank balances, which are in nature of cash equivalents? Yes, bank statement is one way, bank passbook is one way. What could be other ways? Yes, Dilip, review internal control system. Yes. What could be other way for verifying bank balances which appear in the financial statements of company? Yes, Tejaswin, BRS, bank reconciliation statement is also correct. Amar, you are saying bank deposit receipts. From bank deposit receipts, you can, what you are trying to say, you can verify one entry or few entries, but what about balance? So guys, one important thing you are missing out here is that auditor can send confirmations to bankers for confirming the balances which the said party, which the said company is holding with them in various accounts. Okay. BRS, preparation of BRS, proper BRS, bank reconciliation statement is responsibility of management. Auditor can verify the bank reconciliation statement prepared by the management. He can make his own BRS. He can reperform all the controls to verify the controls. Okay. And to see various heads of bank reconciliation statements like check deposited but not credited, check issued but not presented for payment. Okay, all these type of things. No, checkbook checking, Manoj Mukwana, checkbook, what you can trace few entries from checkbook. You can only get the name of persons in whose favor checks are issued. But here we are talking about the balance which is appearing in the financial statements. So for balance, obviously the auditor can send external confirmation to the bankers with which the company is holding various accounts. So in this way, the auditor can verify existence and completeness assertion of cash and cash equivalents. And as far as valuation is concerned, there is not much in cash and cash equivalents, except when the company holds some accounts in foreign currency, some bank balances in foreign currency, then it has to be verified and ensured that these are converted at appropriate exchange rates in accordance with the applicable financial reporting framework and accounting standard. Yes, AS 11, Tejaswin, you're right. Clear, guys? So, like all other items of balance sheet and of profit and loss and of statement of profit and loss, there are disclosure requirements prescribed in Schedule 3 to Companies Act in respect of cash and cash equivalents, like cash in hand, has to be disclosed separately. Checks in hand are to be disclosed separately. Similarly, there are other disclosure requirements which you have to remember, like balance with banks, checks on hand, cash in hand, earmarked balances with banks. So what are earmarked balances? Earmarked balances are those balances which are maintained for a specific purpose. So earmarked means these have been specified that these would be used for such and such purpose. Like some money is lying specifically for paying dividend. Okay, so that is an earmarked balance. Okay. Balances with banks to the extent held as security against borrowings as margin money. Okay, so the company may be having some balance with bank as margin money for availing some facility. Okay, so these are to be separately stated. Repatriation restrictions shall be separately stated. Repatriation restrictions means whether the money can be repatriated, it can be sent outside or not. Okay. Yes, for how many years, Deepali, what you are asking? Yes, Deepali, what you are asking, for how many years? And the auditor can ask for confirmation not only in respect of various deposit accounts, current accounts, but also EEFC accounts. So what is an EEFC account? EEFC account is exchange earners foreign currency account. So like exporters can have this account, exchange earner foreign currency account, where they can hold these accounts in foreign currency. Yes. And other accounts like escrow accounts. Yes, guys, you know the meaning of escrow accounts? Anyone? Yes, Depali, that is as per provision of law. Yes. You know the meaning of escrow accounts, guys? Yes, anyone? Yes, escrow accounts, students, like escrow means, say, generally when there is a contract between the two parties and say they do not trust each other. So they keep the money with some neutral party, with some third party. And so we say that that money is kept in escrow account. And it can be used only after certain obligations are performed. You have to understand this much. Not much detailing, since the word is appearing in your module. That is why I am telling you. So these are the procedures which an auditor has to perform to verify existence, completeness, and valuation assertion. And you have to remember disclosure requirements as per Schedule 3. So anyway, you would be remembering all the requirements of Schedule 3 to the Companies Act. That is the foremost thing I told you at the beginning. Okay. Yes. So yes, guys, you are now ready for doing some case studies. Yes, students, are you ready for doing some case studies? Guys, and when you read the case study, my request to all of you is read the case study carefully and do not hesitate in answering the question. Those of you who are live, who are seeing this session, all of you should attempt to answer the questions depending upon level of your understanding, level of your knowledge, which has been gained till now. So, a one or two question in the case study may not be directly related to this chapter. It may be related to the chapters which you have done previously. So I think it would be better if you attempt the questions which we shall discuss. So first of all, there are two case studies, and in these two case studies, there are total of 7 questions, 3 in first case study and 4 in second case study. So if something pertains to some concept which you have not read till now, so I will explain to you, and we shall together discuss, we shall together see where you are falling, where your knowledge is lacking. Okay. So read this case study. The first para is this, and thereafter I'll be scrolling. So DS and company chartered accountants are statutory auditors of SAR Industries Private Limited. So the case study states that there is a firm of chartered accountants who are statutory auditor of one private company. So when you read the case study, it's always underline the name. Okay. It would show, it would highlight to you, it would emphasize to you that the auditee client is a private company. So you know its legal structure, organization, immediately it comes to your mind that it is a private company. A company engaged in manufacturing business since 2018. Highlight, underline the important words that the company is in business since 2018. Okay. So by this way, by underlining, you are ensuring that you are reading each and every word. Okay. And thereafter, it becomes your habit. Okay. The company is operating from rented premises. Now, this is a factual description given that the company doesn't have building of its own. It is operating from a rented premises. So the premises, the building of company are on rent. It had upgraded its machinery last time in 2020. So certain expenditure was incurred by the company in upgrading its machinery way back in 2020. Okay. So accept interest in this company, they and their relatives do not have interest on ownership in any other business entity. Okay. So directors and their relatives do not have interest or ownership in any other business entity. It means that they are having business interest only in this entity. There are no related parties. It is simple for you. So DS and company have accepted audit of the company for the first time. Now it is the first assignment of DS and company. Promoters and directors of company are known to engagement partner for a considerable period of time socially. So they know the engagement partner, like he may be living in the same city. So one can know other persons in the society. However, it is for the first time that any type of professional work related to this company has been accepted by DS and company. But it is the first time that they have come into contact professionally for doing some audit work or this kind of professional work. So while formulating audit plan for the company, CAD engagement partner has planned certain risk assessment procedures and further procedure consisting of tests of controls and substantive procedures in relation to different areas. So obviously, before conducting audit, you know that auditor makes an audit plan in accordance with which standard? Yes, guys, come on quickly. So we shall also try to revise some important essay names also while we are doing a case study. Yes. No, Tejaswin, you are writing. I am asking about planning. Okay, that's right. You are writing essay 315. That is in relation to performing risk assessment procedures. But I am asking about planning. Yes, Pranav, you are right. Essay 300. So the auditor has planned certain risk assessment procedures and further procedures. He has planned. He has not yet performed. So that should be your way at looking at the things, students. Now here the word is planned, not performed. So that is why, students, I request you to cultivate a habit of reading carefully, of reading minutely. You should not read it in a casual manner. Otherwise, you may miss some important information, or you may ignore some important information on which some question may be based, which could have some implication for answering a particular question, and you may end up giving a wrong answer. Yes, essay 300 is correct. Sanya, Ritika, Dipali, all of you are saying correctly. So some data is given here for year 22-23 and year 21-22 relating to this company. So what is the name of the company? SAR Industries Private Limited. So some financial data is given. It is extract of financial information. Here also keep a tab on the words used. Like this is an extract of financial information of company. It is not a balance sheet as such. The situation is telling you that certain financial data which has been taken from the financial statements of the company is given below, is being reproduced. Clear? And figures are in rupees crores. Okay. So these figures are given. Year 21-22 turnover was 15 crore. Now it is 30 crores. So turnover has doubled. If you see the figures, turnover has doubled. Inventories were of 2 crores in 21-22. Now these are of 4 crores. 22-23, 4 crores. PPE gross block is stated 1.25 CR gross block. Okay. Net block 1.251. Okay. Gross profit 3.75 crores and now it is 6 crores. Trade receivables 5 crores and 10 crores, double. Okay. Yes. So you understand these figures, students? No problem till now. What do we understand by these figures? These should be clear to you. Nothing, no complication is there. Yes, guys. Okay. The PPE items, now it further describes the PPE items consist of machinery only. So the paper setter has made it more easier for you, has made it more convenient for you by saying that PPE items consist of machinery only. So it is already given that building is on rent. Okay. So the company doesn't have building, land building on it of its own. So while planning procedures, now planning, it is again talking about planning. While planning procedures in respect of PPE, now the auditor is planning procedures in respect of PPE. Auditor has included procedures like inspecting and reviewing company's plan for performing physical verification of PPE. He is saying, look, I would verify, I would call for the plan, how the company goes about physical verification of PP items, how they carry out physical verification. Remember again the basic point that physical verification of PPE is primary responsibility of management. This I have told you n number of times. Remember, and I am telling you, many of you are going to mistake to commit. You are going to commit mistakes in the exam on this count. Verifying cost of PPE items acquired during the year with purchase bills and recalculation of depreciation charged in statement of profit and loss. Now, certain procedures planned by him. Now, these procedures have been planned by him in respect of verification of PPE. Like I would review company's plan for performing physical verification of PPE. I would verify cost of PPE items acquired during the year with purchase bills. Fine. I would recalculate depreciation charge in statement of profit and loss. Like this. Okay. Further, while performing risk assessment procedures, now planning part is now finished. Now, while performing risk assessment procedures, he has actually performed risk assessment procedures to identify risk of material misstatement in financial statements. Engagement partner has come to notice, it has come to his notice that there is considerable variation in gross profit ratio as compared to last year. Now, as compared to last year, it has come to his notice that there is considerable variation in gross profit ratio. Now, during performance of substantive procedure, he has also studied data of purchases and sales of company during year under audit and has also compared such data with preceding year and earlier years also. This aspect he has also done. Now, see, now answer the following questions. Now the case study is clear to you guys. And I have already uploaded this case study and in your ID also on BS portal. You can download it from there also and go through it once more if you find it convenient. Yes. I am again taking a pause of few seconds. So you just go through this once again. Yes. Now we read question number 1. CAD has included in audit plan certain procedures in respect of PPE items. Now, while he was planning, what was the para in relation to that? He had included certain procedures like inspecting and reviews company's plan, verifying cost of PPE items, recalculation of depreciation. So the based upon this case study, based upon the data, which of the following audit procedures included in audit plan is not likely to be relevant in respect of PPE items? Yes. Tell me what should be your answer. I would once again show to you the data and relevant para. Yes. The question pertains to this para and data is before you. Simple, just guys, very simple. Just plain application and application of common sense. So guys, do not rush. Please do not rush. So there are 42 participants in this meeting. So at least I think 40 should be students. So I want 40 answers. Only 4-5 answers have come. Vismita, Tejaswin, Vedant, Bhumika. Yes, guys, if you want, try how you would answer. What would happen? Maximum you would get a wrong answer. Heavens are not going to fall. No answer. First answer question number 1, which we are discussing. Yes, still not more than 10 guys have answered. And all of you are answering differently. Few of you have answered A, few of you have answered B, somebody has also answered C. Yes, Kasak, you are asking me to show again the MCQ. Okay, I would again show to you the MCQ. First of all, read, assimilate the contents of this table and this para. So the question is on property, plant and equipment. So assimilate what is the data relating to property, plant and equipment given in this table. Okay. Now see the question again. The question is asking from you is which of the following is not relevant audit procedure. Now you want to verify PP items. You have planned certain procedures. In this case, based upon the data and description given, you are answering a case study. Which of the following is not likely to be relevant audit procedure? It can be that all four are relevant audit procedures generally, but in the situation given, in the data given, one of the procedure is not relevant. Which of one is that procedure? Yes, students, tell me. Now I have seen your answers. I think the students, about 15 of you, 15 or maybe 20 of you have answered. So rest others are not probably willing to answer. So guys, tell me the gross block of property, plant and equipment is here. It is given 1.25 crore. Last year it was 1.25 crores. And this year it is also 1.25 crores. And net block last year was 1.25 crores. And this year's it is 1 crore. It means depreciation is charged. Yes, Tejaswin, right? Now gross block remains the same. And it is also given in the case study that last time machinery was upgraded. It means capital expenditure was incurred. It was way back in 2020. So it means no capital expenditure has been incurred during the year. And it is also given that only machineries constitute a PPE. Only machineries are the only item in the PPE. So it means that there is no fresh addition of capital assets under PPE. So what is the relevant answer in this situation? Verifying cost of PPE items acquired during the year with purchase bills. This is not relevant because no items have been acquired during the year. And how students you are writing A option is inspecting and reviewing company's plan for physical verification of PPE. This auditor is supposed to do. Company responsibility of physical verification lies with whom? Lies with management. The auditor's responsibility is to review how the company is going to make such a verification, review their plan, review their methods. Assessing depreciation method use is also relevant because depreciation has been charged, as can be seen from the figure of net block. And recalculation of depreciation charge in statement of P&L is very much relevant because depreciation has been charged. To verify that depreciation has been calculated correctly, accurately, this step is necessary. Now, this step is not necessary in this situation. We are talking about case study. In this situation, tell me guys how simple it was. How simple it was. But still, except few, Bhaskar Das and Nancy and probably Sanya. Yes, Sanya. Most of you have messed it up. Yes, guys, have you understood it? Yes, students, have you understood the question and how, what was its solution, how it was to be answered? So look how simple it was. It was like a KG type question, nursery type of question. But still you failed to apply your mind because you are not reading the things carefully. You are not in the habit of reading the things carefully. Yes. And now question number 2. Now question number 2 relates to gross profit ratio. Now which of the following, now this is gross profit is given 6 crores and 3.75 crores. Year 21-22 gross profit was 3.75 crores and year 22-23 gross profit is 6 crores. Now what does the question say? It says which of the following statements is likely to be most suitable to explain fact relating to variation in gross profit ratio as compared to last year. Now there is variation in gross profit ratio. So first of all, you see whether gross profit ratio has increased or decreased. Then you pick the right option. Now take your time, students. Do not send your answers in a hurry, please. Take your time. At least take 3-4 minutes. This question is a little bit tricky. Okay. So try to answer it correctly. I am showing, first of all, I'll show you again data. And my request to you is keep a piece of paper and pen with you or some writing pad register which you are having and note the relevant figures in relation to gross profit of the 2 years 21-22, 22-23. Now the question is asking from you is gross profit ratio. Now see what is given in this table. Tell me, first of all, tell me what is given in this table. Uh, Now I will tell you how you have to answer the questions. Yes, you have picked a pen and copy notebook. What is given in this table which is relevant to the second question? What are the relevant items pertaining to second question? The question pertains to gross profit ratio. Yes. Turnover, yes, Kasak, you are right. Yes, Pranav, you are saying gross profit is gross profit ratio by turnover. Yes. So remember, students, here gross profit is given. Whereas in question, it is asking about gross profit ratio. The two are different things. So what is the formula for calculating gross profit ratio? Formula for calculating gross profit ratio is gross profit divided by turnover into 100. So we can have gross profit for 2 years. Now the question is about gross profit ratio, not about gross profit. Here some students may be making mistake. Yes, Vismita, you are absolutely right. Because they may assume this figure to be of gross profit ratio, whereas it is written here that the figure is in rupees crores. So here lies the catch. So first of all, you have to calculate gross profit ratio of both the years. So yes, Aisha, Vismita, all of you are right. Ritika, Bhumika. So tell me what would be the ratio for year 21-22 and 22-23? Yes. Divide 3.75 by 15 into 100 and 6 divided by 30 into 100. Yes. What was the GP ratio in 21-22 and what was the GP ratio in 22-23? Yes. Answer on BOS mail. Yes, 21-22 is right. Aisha, Kasak 25% and 23 Vedant it is 20%. Yes. And Aisha, you are writing 25 crore. No, it is not 25 crore. It is 25%. So when you multiply it by 100, 3.75 divided by 15 into 100, it comes to 25%. So gross profit ratio is 25%. Here it is 20%. So what is the, so gross profit ratio has, there is a variation. Gross profit ratio has decreased from year, from 25% in year 21-22 to 20% in year 22-23. So now we can say like this, that in year 21-22, the ratio is 25% and it has decreased to 20% in 22-23. Okay. So it has decreased. So now see quickly the options. In one option, it is stating increase. Gross profit ratio has increased in year 22-23. So this is incorrect totally. This is blatantly wrong. Okay. Yes, decrease to, all of you have calculated ratio correctly. Now the question is asking from you is which of the following statements is likely to be most suitable to explain the fact relating to variation in gross profit ratio as compared to last year. It is asking from you what could be the most suitable reason for explaining this variation in gross profit ratio. So you know how the gross profit ratio is calculated, gross profit upon sales. You know the meaning of gross profit also. You understand what is gross profit. So tell me which of these options is most suitable. Yes. Only one, two, Tambeshwari, Pranav, Tejaswin. Yes. What about others? B option is ruled out from A, C, and D. Which of the option is correct? Yes, guys, still only 6, 7 guys have answered. Tejaswin, Paranjali, Vismita, Aisha. Yes. Any more answers, students? Yes, Ritika, thank you for being honest. You have shared your dilemma. There is nothing wrong in it. At least you are being honest. Yes. So now we'll discuss the options. So some students, Vismita, Bhumika, Niruben, and others, you have chosen to answer option D. Tell me how you have chosen to answer option D. Yes. Uh, yes, Manishi. Yes, Manishi. अनम्यूट करना जरा कुछ देर के लिए. Yes, those who have answered option D, Pranav. So how you have chosen option D? Yes, you can talk, Vismita, if you want to. Pranav, the mistake which you have made is written in your answer itself. You are saying that because the company didn't make an allowance for obsolescence of inventory, so it may be overstated, right? This logic is right. So when inventories would be overstated, what would be its impact on gross profit ratio? Would it increase or decrease? If the company has not made an allowance for obsolescence, then it would lead to overstatement of inventories. So it would increase. Yes, Dilip. Yes, right. It will increase. So here, whereas gross profit ratio has decreased. So this option is again not based upon facts. Incorrect. Yes, Ritika. Is it clear to you now? Yes, Ritika, Pranav, is it clear to you now? Yes, guys, is it clear to you now? Drop a mail if you don't want to ask on the Zoom. Okay. So Manish, म्यूट कर दीजिए दोबारा. So what was the C option? Gross profit ratio has decreased in year 22-23 as compared to 21-22. That part is correct. It may be due to the reason that office staff salary engaged in administrative functions and office maintenance expenditure could have increased, but it has got nothing to do with the gross profit, because gross profit is calculating by deducting direct expenses. Now, office staff salary is not a part of direct expenses. It is administrative expense. It is charged to profit and loss account. So this option is also wrong. It has no impact upon gross profit ratio. So this option is right. A was the correct answer. That since the company's turnover has doubled, so the company may have sold to procure more orders, the company may have reduced its sale prices to get volumes. So option A was the right answer. All other three options are incorrect in this way. Pranav, yes, you are sitting. First I wrote A, then I got confused. No, that is how you have to see in your exams and keep your nerves intact. So now the ICAI is testing your ability to apply the concepts. It was just a plain application of your accounting knowledge to an auditing situation. How simple, guys, it was. How simple it was. You are reading gross profit from probably from your foundation level, I think. Clear, guys? Yes. Question number 3. Now it is fairly direct one, and we have done this question while doing this topic. Fairly direct one. You even need not refer to the financial data given in the case study. Yes, guys. Send your answers on BOS mail, not a Zoom chat. Send your answers on BOS mail. No. Yes. Now again, guys, some of you are making the mistake. So while we were doing this topic, substantive analytical procedures in SA 520 in chapter 4, I had told you specifically that when an auditor compares data of 1 year with previous year, then he is performing a trend analysis. He is not calculating the ratio. Yes, Tambeshwari, I had explained this, and probably if I remember correctly, at that time we had also done a similar question, and probably Tejaswin had answered it wrongly then. Now he has answered it correctly. Am I right, Tejaswin? Yes. No ratio is being calculated. Ratio is calculated when you take two figures like debtors and turnover, like gross profit and sales, and you calculate some ratio. Here he is comparing the figures of one period with another. It is called trend analysis, not ratio analysis. If you see the topic of substantive analytical procedures in your chapter 4 under SA 520, where all these four names are given: ratio analysis, trend analysis, reasonable test, you would see the same example given there. Yes, quickly, yes, Tejaswin, I request you to share the page number of module 4, where this example is given for the benefit of students. Yes, Tejaswin has given the page number. It is 4.108. So if you turn over the page 4.108 in your module, you would see the similar example given in trend analysis. So you have to understand the distinction between ratio and trend analysis. Clear? Yes. Now we come to case study 2. Yes, are you ready, guys? Are you still charged up, guys? Or you are getting tired? So we have to do MCQs and descriptive type questions today also. Yes. So first we read the case study. During course of statutory audit of Content Living Private Limited. So again, it is a private company and statutory audit is being conducted. CAK notices that company has availed a term loan sanctioned for rupees 11 crore, 11 CR from MBC Bank Limited on 1st September 23. So the company had availed a loan from MCB Bank Limited on 1st September 23 by mortgaging residential property of company's director. So some term loan was availed. So probably company could have availed term loan for installing machinery or for some other thing. And the company's director's residential property was mortgaged with the bank. The outstanding balance in the term loan as on 31st March 24 was rupees 10 CR. So the balance which was outstanding as on 31st March 24 was 10 CR. So sanctioned loan was 11 crores. What was outstanding on 31st March 24? It was 10 CR. These two figures are there. Okay. The term loan was repayable in 60 monthly installments. 60 monthly installments. The term loan was repayable. And installments worth rupees 2 CR are due for payment up to 31st March 25. So in next 12 months, 2 CR are payable. Interest was to be paid on term loan as and when due. Necessary form CHG1 required to be filed for registration of charge on MCA portal was filed late on 30th November 23. So the loan was sanctioned on 1st September 23 and the form was filed late. It was filed but filed late on 30th November 23. So as you know, as per provisions of Companies Act, a charge form is required to be filed on MCA portal for registration of the charge. This you have already read in your company law. So it was first appointment of CAI as statutory auditor of this company. So again, CAI is here also first time appointee as an auditor. He was appointed in the AGM of the company held in the month of September 23 for a period of 5 years. Material inventories of 20 CR stood in financial statements of the company as on 1st April 23. So he is being appointed in September 23 for the first time. And opening stock, opening inventories were rupees 20 crores. However, some engagement team members are confused regarding their responsibilities in respect of opening inventories reflected in company's financial statements. Okay. Yes, guys, you are able to see the screen? Yes, case study is visible to you guys? Okay. So the opening inventories were 20 crores. So the revenue from operations of company reflected in financial statements for year 23-24 is revenue from operations is 80 crores. On going through books of accounts, one of team member notices that commission paid to certain agents for facilitating sales amounting to 85 lakh during the year has been included under the head office expenses. So once again, go through this 3-4 paras, guys, of the case studies. We are taking a pause of few seconds and thereafter we will come to the questions. So during this pause time, go through once again these relevant paras. Yes. Yes, guys, you're done with it. Now see question number 1. keeping in view information regarding term loan, which of the following statements is most appropriate in accordance with requirements of Companies Act 2013? So it is a question of classification, Schedule 3 disclosure requirements basically. So now read what was the description of term loan. So the company had got sanctioned a term loan. That loan was sanctioned for 11 CR, but the amount outstanding as on 31st March is 10 CR. So what would be appearing in the balance sheet of the company as on 31st March 24? 10 CR. What is outstanding? Because the remaining amount has since been paid. So the term loan was repayable in 60 monthly installments, and installments worth rupees 2 CR are due for payment up to 31st March 25. Okay. So interest is to be paid, and a charge was filed belatedly, but it has been filed. So see the options now. These are options A, B, and these are options C and D. Yes. 4 options are there. Which of these options is correct? Only 3. Tejaswin, Kiran Kumar ji. Only 2 persons have answered. Tejaswin and Kiran Kumar ji. Yes, guys. See again the question. Keeping in view information regarding term loan, which of the following statements is most appropriate in accordance with the requirements of Companies Act 2013? Now, what are these options? Option A is balance of 10 CR outstanding in term loan. Obviously, as on 31st March 24, 10 CR was outstanding. Shall be classified under long-term borrowings as secured borrowings. So it was secured definitely by mortgaging residential property of director. But whether this is right or wrong, this we have to see. So always, students, always read all the options. Even if you at first glance you know that this is the right answer, but still make a habit to read at least for once all the 4 options. Okay. Now B is balance of 8 crores shall be classified under long term borrowings as secured borrowings, and 2 crores should be classified as under secured short term borrowings separately. Okay. And third is balance of 8 CR shall be classified under long term borrowings as secured borrowings, and 2 crores should be classified as other current liabilities. And then is balance of 10 crores shall be classified under short term borrowings as secured borrowings. So first of all, tell me whether this is whether term loan is a long term borrowing or short term borrowing. Yes. Whether term loan is a short term borrowing or long term borrowing. Yes, long-term borrowing. All of you, Tejaswin, Bhaskar, Kiran Kumar, T, Dilip, all of you are writing correctly. So it is a long-term borrowing. So it means that option D is totally ruled out. This is totally wrong. It is a long-term borrowing. And in all the three options, now it is referring to it as long-term borrowings with changes here and there. So what are the disclosure requirement of Schedule 3 if you see? Yes. So if you see disclosure requirements, long-term borrowings shall be classified as term loan from banks. Okay, this part is correct. Yes, Ankit, your answer is visible. I am coming back to you. Borrowings shall be further classified as secured and unsecured. So it is a secured borrowing as known from the description of the uh, case study, description of the situation. Okay. And what is included in short-term borrowings? Loans repayable on demand, current maturities of long-term borrowings shall be disclosed separately under the heading what? Short-term borrowings, which are due in next 12 months. These would be shown under short-term borrowings. So the answer is B, which many of you have written correctly. Answer is B, because it is in accordance with requirements of Schedule 3. So 8 crores. So the total balance is 10 crore. Now we would break this balance. 8 crores would be reflected under long-term borrowings and 2 CR would be reflected as current maturities of long-term borrowings under short-term borrowings. Clear? So same simple application of Schedule 3. Now see question number 2. The company had registered charge in favor of MCB Bank Limited belatedly on MCA portal. Now, which of the following is correct in accordance with the requirements of Companies Act 2013? See, students, this question contains some reference to CARO, which we have not studied till now. We will be reading it in Companies Act. We would be reading it in chapter 8 in module 2. So I'll explain the answer to this question to you. So when the company took a loan from the bank, took a term loan from the bank, it filed charge form on MCA portal, but the charge form was filed late. Only thing, this much thing is given. So remember, understand that in CARO 2020, when you would read it, company's auditor's report order, there is no requirement of reporting late registration of charge under CARO 2020. When you would read, you would understand that there is no requirement of reporting late registration of charge under CARO 2020. So we had read in this chapter, in chapter 5, that where charge has not been registered or satisfied, then it has to be disclosed. But here it has been, the form has been filed, the charge has been registered, but the form has been filed late, probably by filing some by giving some additional fees. Okay, so in this question, the answer is first is disclosure regarding late registration of charge during financial year is required. No, it is wrong. It would only be required when these are not yet registered. When the auditor is auditing, it is still not registered during the financial year. Disclosure regarding late registration of charge during financial year is required. Again, this is wrong. Caro 2020, I have told you that auditor has no duty. And this C option is also wrong because it is written here that in Caro 2020 there is auditor's duty. D option is right. There is no disclosure requirement in financial statement regarding charge registered belatedly during the year, and the statutory auditor also doesn't have duty to report late registration of charge under Caro 2020. Okay. Now question number 3. So now this is from the part which you have read. Now the auditor has accepted audit for the first time. He was appointed in AGM held in September 23, right? So he is auditing for year 22, 23, 24. He is auditing books of accounts for year 23, 24. He has accepted the audit for the first time. So opening stock is coming in the financial statements as on 1st April 23. Opening inventories of 20 crores are coming, material opening inventories. So which of the following is not likely to provide sufficient appropriate audit evidence to engagement team members in this regard? Now tell me which essay is applicable in this case. First of all, tell me the name of the essay. Are you able to correlate, guys? Which standard on auditing would apply in such a situation? No, essay 501. No, not at all. Not at all. Tejaswin, Pranav, both of you are wrong. So I have explained to you the situation. Yes. Any other responses? No, not at all, Bhumika. No, essay 320 is also wrong. Yes, anyone. I have explained to you the situation. The auditor was appointed in September 23 in AGM held on September 23 for a period of 5 years. He is auditing for the first time for year 23-24. And there is opening stock of 20 crores reflected in financial statements for the year 23-24. Yes, Pranjali. Yes, great. You are right. It is essay 510, 503, Ankit. There is no essay 503. It is a case of initial audit engagement. Guys, how you can forget that? Initial audit engagement. Yes, Pranav, now you are right. Anjali, initial audit engagement. Opening balance, yes, Vedant Tiwari. So when there is an initial audit engagement means the auditor is has accepted the audit for the first time, or accounts of the previous years were not audited. So essay 510 applies. So how you are going to obtain sufficient appropriate audit evidence in relation to opening inventories? Obviously, you can't roam back in the time period. You do not have a time machine to roam back in the time period. You are appointed in year 23-24. So you can't make physical verification as on 1st April 23. Okay. So which of the following procedures is not likely to provide sufficient appropriate audit evidence to engagement team members in this regard? Yes. Yes, only 4 responses have come. So guys, point is that in the financial statements, there is opening inventories. And as per SA 510, there is certain responsibilities for statutory auditor in respect of opening balances only. So that is what SA 510 is all about. So there are procedures described in SA 510 regarding verification of opening balances, like verification of current assets, like verification of current liabilities, non-current assets, non-current liabilities. And like now, approach this question from common sense point of view. Observe current physical inventory count and reconcile it to the opening quantities. Yes, that seems to be reasonable. You can make a back calculation. Okay, that seems to be reasonable. Is not likely to provide. It means 3 are right and 1 is wrong. Okay. Malappa, Paranjali, how you are writing A? He can do in this manner. Perform audit procedures on valuation of opening inventories. Yes, he can at least check the valuation of opening inventories, that whether valuation of opening inventories is correct or not. He can check that. He can verify that. He has to go through papers only to see that valuation of opening inventories is right, is proper, is in accordance with the, was done in accordance with the accepted accounting principles and in accordance with the accounting standard. Performing audit procedures on net profit. Now, how this is going to provide sufficient appropriate audit evidence to him in regard to opening inventories? Because net profit would be an effect of many things. So this is not likely to provide him sufficient appropriate audit evidence. Performing audit procedures on cutoff, whether on cutoff date, it means some procedures were performed to see that all the inventories which were required to be included were included. That seems to be relevant procedures. So if in this question, instead of net profit, the word gross profit was used, then it could have been a relevant audit procedure, but not net profit. So all these procedures are written in your SA 510. Okay, so the answer is C. This is wrong. This is odd man out. So right answer is C. This cannot provide sufficient appropriate audit evidence regarding opening inventories. So Ritika, yes, you have answered correctly. Tejaswin, Vismita, you have answered also correctly. So you can see, guys, SA 510 and in SA 510 in chapter 4, you would find procedure in relation to current assets, where you would find procedure in relation to opening inventories. So option is C. Yes. Now, as regards commission of 85 lakhs paid to certain agents, now we know that commission was paid to certain agent for facilitating the sales. Which of the following statements is most appropriate? Now, it is a direct schedule 3 question. It is a direct schedule 3 question. Yes, tell me what should be the answer and what is the reason? Yes, only 3 responses have come. Rath, Palini, Bhaskar Das, and Pranav. Yes, few more have come. Yes, guys, that's a simple question. Amit Biswas, Sahu, Kasak. Yes, guys, so we'll take. So commission paid to agents has been correctly debited as an expenditure item in statement of profit and loss, and no further disclosure is required. Now, if you read Schedule 3, guys, there is an instruction that if any item of expenditure or income, if it exceeds 1% of the revenue from operations, or rupees 1 lakh, whichever is higher, so it has to be disclosed separately. So the revenue from operation in this case is 80 crore. 1% comes to 80 lakhs. Commission paid is 85 lakh. So it has to be disclosed separately. All other options are wrong. So if you read Schedule 3, there is a requirement in it, and it is also stated as an example in your chapter 3 under SA 320. So answer is option C. No, it is not D, Kiran Kumar ji. Commission paid to agents should be booked as separate items to judge applicability of TDS. No, no, no. We are preparing balance sheet. The company is preparing balance sheet in accordance with the provisions of Companies Act 2013. Now, how does TDS come into play to judge applicability of TDS? It has nothing to do with that. Because the expenditure item is a material one. It exceeds the limit set in Schedule 3. That is why I have told you guys to read Schedule 3 meticulously. And it is also stated, the same example is given in your chapter 3 under the topic of materiality. Yes, guys, have you understood it? Yes, students, have you understood it? Drop a mail, guys. Okay, so we'll take a short break of 5 minutes, guys, and come back again after 5 minutes. So Manish ji, 5 minutes break. Yes, welcome back, students. So, Balachandran, what you are trying to say, for our whole syllabus, we refer schedule 2, 3 only or anything else? See, at intermediate level, you are supposed to know the contents of division 1 of schedule 3. Okay, so that is in your accountancy paper also in module 3, and that is also in your that also relates to chapter 5 in auditing also. So schedule 3 contains instructions for preparation of financial statements of a company. Okay, to whom the accounting standards which you have read in your accountancy classes at intermediate level are applicable. So since we are focusing on the preparation of financial statements of different entities with while laying special emphasis on the financial statements of companies, so you have to know the contents and requirements of schedule 3 to the Companies Act. Okay, yes, question number 1. Yes guys, MCQs. Read the MCQ and answer, guys. And Hardik Marwaj, you are logged in Zoom, but I haven't seen any answer from your side. Is everything okay? Yes, Hardik Marwa. Okay. Tejaswin is equal to Hardik. Okay, that's great. Tejaswin. So you are having two names. Okay. So Hardik is probably your nickname, and official name is Tejaswin. Am I right? Great. Yes, guys, answer to question number 1. You are able to see the MCQs? Yes, guys. Two responses have come, Anjali and Ankit Mishra. Students, read the question carefully. Again, do not answer in a hurry, please. Take your time, assimilate the contents. Vedant, Malappa, Sahu, and Sanya have also answered. Yes. So almost all of you are answering correctly. Ankit, probably you have first answered A. Now, whether you have changed your mind by seeing the answer of others or on your own, that you have to be honest to yourself. So ABC Limited is engaged in manufacturing of electric two-wheelers, electric scooters. So some customer has gone to court due to incident of fire in battery operated vehicle. The damages claimed are to the tune of 5 lakhs. The company insists that incident was due to improper charging of battery and has nothing to do with the manufacturing design. The company's lawyer advised that it is probable that company is not likely to be held liable. So whether it is a provision or it is a contingent liability, it is a contingent liability. The lawyers have told that no outflow of money is expected. So then why you would be making a provision? So answer is C. All other options are wrong. It is not in the nature of reserve. It is not, it won't be shown as other current liabilities. It would be disclosed as contingent liabilities in notes to accounts. Okay. So clear. So this most of you, yes, that's right, Ankit. So question number 2. Read the question, fairly simple one. It should be easy to do. Question number 2. Yes. You are auditing accounts of PKS Private Limited. So you are auditor of PKS Private Limited for financial year 22-23. During the year, some bank has sanctioned and released credit facilities to the company consisting of cash credit limit of 1 CR and term loan for purchase of machinery amounting to 50 lakhs. So what are the disclosure requirements? Yes, yes, guys, very simple. Damn simple. Yes, 5 responses have come. Yes, guys, quickly, come on. Dilip, Sanya, Tejaswin, Ritika. Yes. So guys, answer is C. Now Tambeshwari and Vedant, how you are writing B? Both cash credit facility and term loan shall be presented, classified and disclosed under short-term borrowings. अभी तो केस स्टडी में आपने किया है. This is wrong. Term loans are shown under long-term borrowings and cash credit facilities are shown under short-term borrowings. Just now you have done this. Like this, these are the requirements of Schedule 3, long-term borrowings, term loans. And short-term borrowings, loans repayable on demands. Demand, it means I told you that these are cash credit accounts. So answer is C. How you are writing Tambeshwari B? And Paranjali, how you are stating A is the answer? And Sahu, how you are also writing A is the answer? A is both CC and term loan shall be presented under long-term borrowing. Is cash credit facility a long-term borrowing? Wrong. It is not a long-term borrowing. It is a short-term borrowing. It is repayable on demand. It is generally sanctioned for a period of 12 months. So such a simple question, guys, you answered wrongly. These are free marks, free marks. Yes, question 3. Now, this is slightly ticklish. Read the question carefully and then answer, please. Apply your mind logically. Logically apply your mind. First of all, let me know whether you understand the question, whether you understand the contents of the question, or should I explain the contents to you? And this option is D, guys, not C here. Mentioned wrongly here. Yes, Tambeshwari, you are asking me to explain. Okay. So CAX is auditor of a company. He is verifying whether valuation of finished goods consisting of carpets. So company is in the business of manufacturing carpets. Okay. So obviously carpets are in the nature of finished goods. So he wants to verify whether valuation of finished goods, which are carpets in this case, is proper in the company. So the accountant of the company provides him with costing details relating to carpet samples on the basis of which carpet orders were placed by customers. So what the accountant has done, he has given him a costing. So obviously when you want to verify the valuation of finished goods, you would be requiring costing. How you have arrived at these costs, how you have valued finished goods. Okay. So he has given him the costing which was which relates to carpet samples on the basis of which orders were given. It simply means that when customers ordered carpets, they approved some samples. So he gave costing pertaining to those samples. Now, valuation of finished goods made on basis of these costing details. Which of the following statements is likely to be correct in this regard? Yes, accepted. Yes, Sanya, you are saying accepting as audit evidence. Now, 4 people have answered. Bhumika is saying A. Tejaswini is saying D. 3 have answered. Pranav is also saying A. What about others? Yes, let us see. Vismita is also saying A. Malappa is saying B. Kiran Kumar ji is saying D. Yes, guys, any other responses? Ankit is saying A. So all different answers. So guys, understand this basic concept. See, when sample when samples are made, tell me one thing. When you make sample of a product, would it involve higher cost or lower cost, or exact cost on which routine products would be manufactured? First, try to answer this part. When first of all samples are made of a product, whether it would involve higher costs or lower costs, or the same cost as the routine manufacturing takes place? Yes, Tejaswin, you are saying higher costs. Why? Because for samples, cost would be higher because you would be taking small material. You would have to make it to pass through different processes. Like in case of carpets, you would have to get it dyed, a little bit of sample for manufacturing few pieces of carpets. But when you engage in routine production, your expenses would obviously be lower. So samples definitely have a higher cost. So when you they have uh, in some cases they can have abnormally high costs. Like say in routine cases, the cost of a product might come to 500 rupees per square meter. But in case of sample, it may go up to 1000, 1500 per square meter. Yes, Vedant, you are also writing correctly. It would include higher costs because and why another reason would be that there would be higher wastage associated with it for producing samples. So the costing details which the company has provided, these are not likely to be accepted by the auditor because costing provided by the accountant is likely to be overstated, leading to misstatement. So option B is the right answer, not D. Option B is the right answer. Costing provided by accountant is likely to be accepted by auditor? No, because it pertains to samples, and samples do not have the same cost as routine product manufacturing cost. Costing provided by accountant is likely to be understated. This is wrong because samples have higher cost. D is wrong. So B is correct. Okay. Fourth, now damn simple direct application of law. Which of the following is not true regarding issue of sweat equity shares by a company? Guys, you have not just to pass in auditing, but try to score 60 plus marks. Yes, all of you are answering correctly. Kiran Kumar ji, Deep, Dilip, Sahu, Apurva, Sanya, Tejaswin, all of you are right. Sweat equity shares can be issued for cash only. This is wrong option. This is not true. They can be issued for consideration other than cash. Okay. See question number 5. Consider the following in relation to a company declared as a willful defaulter by a bank. Which information is required as per Schedule 3 of Companies Act? Which option is right? Four options are there. So first you read this, then I will scroll the mouse. Yes. Which one of this is the right option in accordance with the requirements of Schedule 3 of Companies Act? Yes. Answer is option B, 2 and 3. So if you remember Schedule 3, when a borrower is declared as willful defaulter, then these two things are required to be reported. Date of declaration as willful defaulter and amount and nature of defaults. Reasons for being declared as willful defaulter is not required to be disclosed. So those of you who are just answering from plain reasoning, common sense, they would, because this is a law question, they would answer it wrongly. So answer is option B, only 2 and 3. So if you see the requirements of Schedule 3, only this much is there. Yes. Now look this. Willful defaulter. Where a company is declared a willful defaulter by any bank, the following details shall be given. Date of declaration as willful defaulter and detail of defaults, amount and nature of defaults, and nothing else. Why this has been declared, that is as per RBI guidelines, that is for the banks to see. Only these two things are required to be disclosed in the financial statements. So answer is B. Okay. Now see question number 6. Yes, yes, guys. So again, confusion probably between A and B. So answer is A, guys. This is required to for verification of provision to see whether the provision exists or not. So the question is asking about only existence assertion. Now this relates to reasonability. Now it relates to valuation assertion. Whether the provision is valued properly, it relates to its measurement. Okay. So the answer is A. Which of the following is not an assertion relating to items appearing in the income statement of a company? Oh, very, very simple. Very, very simple. Yes. Yes, guys, you should not get it wrong. Any one of you should not get it wrong. I want a right answer of it from all of you guys. Very simple. 3 marks. Yes, few people have answered. What about others? Yes, guys, come on quickly. Which of the following is not an assertion relating to items appearing in the income statement of a company? Yes. Pranav, Sanya, Tejaswin, Vismita, Anjali, Tambeshwari, Ritika, Balachandra, Kiran Kumar ji. What about others, guys? And all of you have answered correctly. And Kiran Kumar ji, you have answered it A, occurrence. This is wrong. Answer. The right option is D. This is the right answer. The auditor checks whether the different items stated in income statement means statement of profit and loss, whether sales has taken place or not, whether purchases have taken place or not, whether these belong to entity. These are all occurrence assertions. So answer was D. Yes, now you are stating correctly. And Malappa, how you are stating it is C? No, cutoff is very much assertion of profit and loss items of transactions. So answer is D, rights and obligations. Rights belong to assets and obligation belong to liabilities. So these belong to balance sheet heads, balance sheet captions. Yes, question number 8. What is the answer? Which of the following is not a criteria? It means 3 of these are criteria and 1 is not a criteria. So let us see schedule 3 requirements. What are the schedule 3 requirements? The asset would be classified as current if it is expected to be realized in the company's normal operating cycle. It is expected to be realized within 12 months after the reporting date. It is held for the purpose of being traded. So what is written here? It is expected to be realized within 12 months of acquisition date. This is wrong. This is not a criteria. So answer is C. All three are criterias. It is expected to be realized within 12 months after the reporting date, not the acquisition of asset date. Yes, Tejaswin, you have understood. C is not the criteria. D is criteria. Yes, Neeru Ben, you are right. C is not the criteria. D is the criteria. Read schedule 3. Here the word is reporting date, not acquisition date. So guys, these are the minute finer points which you have to always keep in mind, where the paper setter would try to hit you, where the paper setter would try to confuse you. Okay. Yes, again question on schedule 3. Trade payables aging schedule. Which statement is most appropriate? Yes, only Sanya has answered. So guys, unless you do not remember the things, unless you don't learn the things, you would end up splitting your hairs, guys. You would have to put in hard effort. Answer is no, Tambeshwari, you are wrong. Answer is B. Yes, Dilip, you are right. Sanya, you are also right. So if you remember the schedule 3 requirements regarding trade payables aging schedule, you would find it this. There is no separate requirement for disclosures for companies. So these are both are wrong. And this is not complete. So answer is B. Answer is option B. All of you are writing incorrectly. So C, trade payables aging schedule. In schedule in your module. So if you see it, guys, like this. Now it doesn't ask disclosure regarding separately for companies. It is asking disclosure regarding MSME and others for different periods and disputed dues for MSME and others. So answer is option B, not A. Yes, Tejaswin, Kiran Kumar ji, is it clear to you? Yes, guys, now we'll quickly see some descriptive questions, how to answer questions in your exams. Yes. So see this question number 4. Manish, you can unmute. Yes, Manishi. Yes. Yes, guys, if you want to, if there are your some doubts regarding how to write answers in the exam, then you can ask from me on the Zoom. Now all of you are unmuted. You can raise your queries. So see question number 4. So first of all, you read the question. Now this question has been taken from a previous year paper. Actually, this question has come. So XY and Associates are auditors of PQR Limited, which provides electric components on project basis. So the company is in the business of providing electric components. The purchases are huge, and auditor wants to make sure that all purchases made during the period are recorded and there is no understatement or overstatement. So obviously he is checking, he has performed different procedures like cutoff test, correct treatment of goods in transit, obtaining written representations, and performing analytical procedures. Now question gives you a long description, but at the end of it, what is required to be answered? What are the analytical procedures required to be performed to obtain audit evidence as to overall reasonableness of purchase quantity and price? Now you have to answer, you have to state only analytical procedures in respect of purchases. So obviously purchases are of raw material. Okay. So how you can, which audit procedures you would perform as analytical procedures to obtain audit evidence so as to overall reasonableness of purchase quantity and purchase price. So you would take care to write only analytical procedures here and nothing else. Rest all is a description. It is a base for making a situation. You have to write only analytical procedure for raw material purchases. Now, yes, guys. So if you see your module, yes. So you can see how the question has been framed. Performing analytical procedures to obtain audit evidence as to overall reasonableness of purchase quantity and price. Consumption analysis, stock composition analysis, percentage of raw material in total stocks, comparing consumption analysis of this year with previous years, and ratios, creditor turnover ratio, stock turnover ratio, quantitative reconciliation of opening stock with closing stock, purchases and consumption. Yes, Tambeshwari, you can talk to me on Zoom if you want to.
Sir, I am only asking that, sir, which format it written the answer is
So
to
you would start the question as like you would state the following are the analytical procedures required to be performed to obtain audit evidence so as to overall reasonableness of purchase quantity and price. So the you would, from where the question has ended, what is the requirement of question, you would start and you would write points 1, 2, 3, 4. These 4 points you are going to write, which are given in your module, or any other relevant point, like trend analysis is also right point. You can perform inventory turnover ratio and trade payables turnover ratio. All these are correct points. So say if this question is of 4 marks, so any student who has given 4 right procedures, he would be getting full marks. Yes, Tambeshwari, is it clear?
Yes, sir. But
Yes.
sir, another chapter in the question is asked. So whenever it's the very theoretical is answers, it's a very
Tambeshwari, your voice is coming with a lag. It is not clear.
yes, sir. It is clear now.
No, still not clear.
No.
No, it is intermittent. It is cutting in between. Yes. So now we take another question, say. Yes. So it is a direct law question. It is a direct company law question, which has come in auditing paper because of this chapter 5. Yes. Yes. How you are going to write this question? Yes, you would quote the provision of section 53 of Companies Act that issue of shares at discount is void. These can be issued only in respect of in respect of debt restructuring scheme to creditors, or in respect of sweat equity shares. And what are the consequences of not applying? That is also given in your module. It is amount of shares and amount raised, or rupees 5 lakh probably. So issue of shares at discount, you are required to state provisions of section 53. You will write all these provisions, and you will also write the consequences of not complying with the provision. Where any company fails to comply with the provisions of this section, such company and every officer who is in default shall be liable to a penalty which may extend to an amount equal to the amount raised through the issue of shares at discount, or rupees 5 lakh, whichever is less. And company shall be liable to refund all monies received with the interest at the rate of 12% per annum. So this is less of a auditing question and more of a company law question. But still, as it is in your syllabus, as it is in your module, the question has been picked up by the paper setter. Okay. Another question, yes. Now see this question. This is also previous year question. May 24. Yes. So guys, I am pretty much sure that you know the value of inventories, which would be answered in this question. That is 25 lakh 23,000. This plus this material purchase cost plus allocated transport cost, because AS2 says that abnormal wastage is not taken into account while calculating value of inventories. Since net realizable value is 2524, so the goods would be valued at 25 lakh 23,000. But I am saying that this question carried 4 marks. So how you are going to write this in the paper? So you would give reference to AS2. You would state that AS2 states that the company is stock taking has been done by the company, and the company has followed an appropriate method in accordance with the accounting standard, and the cost of inventories as per AS2 are calculated as under material purchase cost plus costs which are necessary for bringing the inventories to its location. So allocated transport cost is included in the cost of inventories, and however abnormal wastage is not to be included, and other general administrative expenses are also not to be included. And since net realizable and the valuation mode as per AS2 is cost or net realizable value, whichever is lower, and since cost is 25 lakh 23,000, and lower of the two figures should be the value of inventories in accordance with AS2. So this is how you should write to get 4 out of 4 marks. So if you would simply write 25 lakh 23,000 value of inventories without any description, okay, you may probably end up earning only 1 mark out of 4. Yes. Is it clear, guys? Yes. Anyone who wants to ask something about how to write descriptive questions? So I have uploaded, guys, 10, 12 questions. You can go through these questions. Few of these we have discussed. So any query on how to answer descriptive question, guys? You can ask me on Zoom right now. Otherwise, we are going to wind up. Yes, guys, any query will wait for few more seconds on how to write the questions, how to write answers to the questions. It is already uploaded, Sahu. All these 3 assignments, MCQs and case studies, and these descriptive questions, some of which have come in the past and some of which are fresh, these have already been uploaded.
Sir, in this description questions given the
Yes.
answer. Yes, sir. Now it's clear, sir, right?
Yes, तांबेश्वरी.
यस सर. तो सर जब हम लिखते हैं तो सर बहुत ज्यादा बड़ा हो जाता है और उससे ढंग से भी
नहीं
नहीं
नहीं, वो
लिखा
थोड़ा
जाता.
सा आपको प्रैक्टिस करना पड़ता है ना, कैसे कंडेंस करना है चीजों को. जो
यस.
रेलिवेंट चीज है वो आपको लिखनी है कंडेंस करके, ताकि उसकी रेलिवेंस खत्म ना हो जाए. आप हैबिट अपनी बनाइए, आप कल्टीवेट करिए थोड़े शब्दों में रेलिवेंट और लॉजिकल पॉइंट लिखने की. अब जैसे इस क्वेश्चन का आंसर जो है, इट शुड बी नॉट मोर देन 5-7 लाइन्स. 5-7
यस.
लाइन्स में आप सारा रेलिवेंट उसको पॉइंट्स लिख देंगे.
तो सर वो सर जो भी चेकर होगा वो 4 मार्क्स कैसे देगा सर? हम 5 लाइन
क्यों?
ही लिखी.
क्यों क्यों नहीं देगा? वो उसको कोई वो मेजर करके, वो हाथ से मेजर करके नंबर नहीं देता पेपर चेकर. वो
ओके
पॉइंट्स
सर.
देख के नंबर देता है. उसके पास पूरी मार्किंग स्कीम होती है कि किस स्टूडेंट ने क्या लिखा है, और उसको ये रेलिवेंट पॉइंट्स लिखे हैं तो उसको उस रेलिवेंट पॉइंट का इतना मार्क देना है.
ओके सर, मतलब कि सर अकॉर्डिंग टू प्रोविजंस एंड आफ्टर.
हाँ
हाँ सर, उसके बाद में जो भी फैक्ट्स है वो लिख देंगे, उसके बाद हम कंक्लूजन
हाँ
देगी.
हाँ.
ये
वो अगर सब उसमें से जो भी आपका ठीक होगा उतना मार्क्स मिलेगा आपको.
यस सर, यही सर पूछना था सर.
हम्म.
जैसे लॉ में लिखते हैं वैसे ही सर इसके अंदर भी लिखना है.
हाँ हाँ.
यस सर. थैंक यू सर.
Okay guys, so we have completed chapter 5. And any more queries, guys? I am once again asking. No queries. So students, on coming Tuesday we shall be starting module 2, and starting a new chapter that is one of the shortest chapters in your syllabus, chapter 6, that is on audit documentation. Only one lecture has been allotted for it. It just consists of 25-30 pages. Very simple, but nonetheless very important. Okay, one question is a must from would be must from chapter 6. Okay guys, so have a good time till then. Thank you. Thank you. Thanks a lot. Yes, yes.